Now, for those unfamiliar with brand finance, we are in our 27th year of existence, and we are a brand valuation and strategy consultancy. And essentially, we exist to bridge the gap between marketing and finance. So we employ a range of marketing experts, branding experts, but we also employ accountants and finance experts. And we try and communicate the importance of marketing and branding through the language of finance, essentially. As you can see on the map there, we've got a global presence, including on the continent here in Nairobi, in Nigeria, as well as in South Africa. And our headquarters are based in the City of London, opposite the Bank of England. Another kind of important point to draw your attention to is that we're governed by a series of best practice organizations. So there's the Marketing Accounting Standards Board, the International Valuation Standards Council, as well as various ISO standards on brand evaluation and valuation that we adhere to. So essentially everything we do is advocate for best practice. Now, you might be familiar with some of our rankings. Essentially what we do is we publish a series of brand valuation rankings, and we typically do this by industry and sector. You might be familiar with some of our kind of more popular ones, like our football rankings, for example. That tends to get picked up on the news quite a lot. And what we do is we take those same rankings and we publish them using regional or country publications too. And that's naturally why we're here today for the Kenyan 25 most valuable brands. Essentially what this allows us to do, it draws on 5,000 valuations that we create and publish every year across multiple sectors and multiple geographies. And that means we can draw down on best practice in terms of managing, optimizing, and growing your brands, irrespective of the sector and geography that you are operating in. And my colleague Ben will be discussing some of the findings from our market research that underpin some of these other studies. Now, just to quickly discuss the framework that brand finance uses for value-based brand management. And it falls under three broad categories. The first is brand research. So we now conduct research in multiple countries across multiple sectors, including here in Kenya. And we use that research for various applications, things like auditing brands, measuring your brand strength versus your competitors. We can do tracking over time, tracking versus other geographies. And ultimately that feeds into our brand valuations. So putting an actual financial value on your brand as an asset, on that marketing tool. And of course that can be used for a range of applications. So things like budget allocations, things like licensing and transfer pricing, like scenario testing, measuring return on investment of your marketing spend. And finally, that then leads into brand strategy. So embedding the valuations that we do as the bedrock of your strategic decision-making going forward to measure future success against. And that's got various applications through brand positioning, brand architecture, franchising, licensing, etc. Just to highlight some of our global clients and technical expertise, we really do work for the world's best brands on an annual and ongoing basis. In fact, we've had a relationship with the likes of Shell and Vodafone for the last 25 years in particular. And I mentioned some of our technical experience earlier, being members of the IVSC, ISO, but equally a lot of our work is audited by the Big Four for technical valuation purposes, and we actually count all of the Big Four as our current clients at the moment. I think it's just worth mentioning some of the benefits of brand valuation, and typically we split those benefits into two broad categories. The first is as a management tool, which I think everyone in the room would be familiar with, using brand valuation for insights, for strategy, for benchmarking, things like educating other stakeholders in the organization, communicating the value and importance of your own brand, both internally and externally, and developing a greater understanding for what makes your brand strong and successful versus, say, your competitors. The second application is as a financial tool, and really this is often for very technical use, things like transfer pricing, doing valuations for mergers and acquisitions, perhaps for tax or litigation purposes. I think it's also worth mentioning that at Brand Finance, we don't just view the brand through the lens of the customer as one stakeholder. We believe that the brand actually impacts a whole range of stakeholders through the organization, both internal and external. So of course, it impacts the customer in terms of driving their purchasing decisions and their behaviors. But equally, for example, we believe it impacts staff, things like employee retention or attracting employees from a recruitment perspective. Equally, depending on your industry, there might be an impact on financial audiences or on, say, government as a stakeholder, if that is relevant. And what I thought I'd do is just show you through some of the analysis that we've done and some of the studies that we've done, really why brands are important and the impact that they can have on a business. So the first, of course, is from a marketing perspective, so from a customer perspective. What our research indicates is that a relative 1 point increase in reputation, as measured through consumer research, a 1 point increase in reputation can drive overall brand consideration or consumers' likelihood of purchase by 12.7%. So that's a very, very significant number, and that number is really highly correlated with customer acquisition, market share, and overall usage. The second is if we look at from a corporate perspective or investor relations, Brand Finance actually runs an ETF-traded product where we partner with a company called Selective in Europe. We give them some of our brand valuation data, and they create an index fund that both corporate and institutional and retail investors can invest directly into. And what that fund showed is that highly branded organizations, when pulled together into an ETF product, outperform the stock market by 1.7 times. So, that's a really strong point to advocate for why brands are important from an investor relations perspective. Thirdly, if we look at from a finance perspective, so your ability to borrow funds at a cheaper rate, what we showed was that strong brands, as measured by Brand Finance, brands that are extremely strong versus their peers, they can get much cheaper financing just because of their perceptions of being a strong brand. I.e., the bank might think that they're a very strong brand, they're unlikely to default on a loan, for example, and therefore give them more attractive finance costs. From a fourth perspective, I mentioned employee attractiveness earlier. Each year, Brand Finance actually publishes a study where we rank and rate global CEOs in terms of how well they govern and steer the brands that they operate. And what we actually found was that CEOs of strong brands, the strongest brands in the world, accept on average $4.5 million less per annum than CEOs of weaker brands, because those CEOs and those employees believe that by governing or working for strongly branded organizations, that makes their own CVs more attractive to future potential employers, and therefore are willing to take a pay cut for that benefit. And then finally, from a regulatory risk perspective, brands with a strong reputation are more likely to gain government approval or win contracts. And we see this in particular in industries like mining, oil and gas, utilities. Those really highly branded organizations are more likely to win lucrative contracts or get better terms from the regulators in those environments. With that, I'd like to hand over to Ben to speak to some of the methodology and take you through some of the results of the most valuable brands in Kenya.
So I'm just going to start going through the methodology, basically so that you guys get an idea of how we land up on the results, which you're eventually going to see. The methodology that we use is called the royalty relief approach. And the broader premise behind it is if if, for example, you hypothetically did not own your brand, so let's say I wanted to sell mobile contracts in another market, and perhaps I approached Safaricom and I said, you guys have a brilliant brand, I'd like to use it to sell contracts in, let's say, Ghana. I would say to them, these are the terms, and they might turn around and say, Ben, that's brilliant, but we want 5% of all the revenue you earn. And that is essentially what would fit into number 2, what you're seeing there. Number 1 is what I find the most interesting and fascinating, and it's the marketing lens of this approach, and that's what we call our brand strength index. So it's made up of 3 key components, and those components are based on what we say an investor would look for in a brand. So firstly, that a brand is being invested in. Caesar's already alluded to, focusing on the long term of things. And a brand is, of course, an asset that you want to take your business into the future with. It's not something for the short term only. So things like marketing spend, your products, and various other things, which will hopefully then build your equity. So if you're investing in your brand, you'd hope to see higher familiarity, higher perceptions around things like consumerism and whatnot. So from there, you'd finally go to performance, and we'd say, okay, if more people are considering the brand, if they think more highly of it, we'd hope to see business improvement. So higher profitability, higher market share, and so on. Then finally, we go into 3 and 4, and this is in line with the ISO standard for valuation, and we look at forecast revenues. Typically, we take that from equity analysts who cover the various stocks of the companies that we're looking at to finally arrive at that value. So the next few slides, we'll look at the brand strength index in a bit more detail. So this is sort of talking about those levers that I was alluding to, where we start with investment. So, that's all with marketing and various components around innovation. Within our current market research, we also look at perceptions around these, so things like customer service, products and whatnot, pricing as well. Do your consumers think that you're offering good value for money, or perhaps if you're in a more premium segment, that you're getting a price premium. Then within equity, we're saying, okay, what is the emotional response? How do consumers perceive your brand? Is it in line with what you're aiming for? How is it compared to competitors? There might be various other KPIs that might differ slightly based on the industry. What makes a good banking brand might not necessarily be what makes a good telecoms brand, but of course there may be harmonies and consistencies that you would want to see in all value-based brand management. And then finally, from that equity, as I said earlier, we'd want to see that brand really performing. Are those marketing efforts and all that investment in the brand, is it leading to positive business performance? Are people willing to use your brand, to purchase it, to use your services? Are they coming back? And finally, is your market share increasing? So this slide looks at what our current brand strength index looks like. So this is how we are assessing each brand in our public study. So you'll see when we get to the results that we have a score out of 100 for every brand that we cover. And you'll see on the left we have the 3 buckets: brand investment, equity, and performance. And then as we start going to the right, you'll see the stakeholders that they're relevant to, and then some of the attributes that are in there. It is an index that's slightly customizable depending on the sector, but broadly speaking, a lot of those key KPIs are in there. And where you see measures like familiarity and consideration, that's coming from our annual brand tracking research that we do each year. Touching on that research a bit more, our current coverage in Africa is in South Africa, Kenya, and Nigeria, but it is a global study which we are looking to expand each year, and hopefully in the next wave, which we'll be doing around September this year, we'll be covering more countries in Africa, but also more sectors and more brands within the current countries that we're in. This just gives a broader idea of what some of those sectors are and some of the key KPIs we cover. if any of you are sort of involved in your brand research in your own companies, some of these might be very familiar. But at the heart of all market research, we have a brand funnel, and a lot of people will refer to that as your relevance. How well do people know you? And then beyond just knowing you, would they consider buying products and services from you? How does that compare to your direct competitors and the other brands in your industry? And then finally, how does that convert to usage? And then from that, we'd look at other KPIs. So that might be things like loyalty or NPS and recommendation and overall reputation. And what's brilliant about tracking all of this is that beyond the KPIs, there are also other things you can do, like statistical analysis to say, okay, which perceptions are important in driving market share? Do I need to focus on overall reputation? Do I need to focus on sustainability? Do I need to focus on innovation? What are my key stakeholders looking for in a brand of my nature? Then this is just an example of sort of then how it's used in practice. So on the right, we would have your brand or several other brands, and we're able to compare them on each of these KPIs. And again, this is incredibly, incredibly useful in unpacking, where is our brand strong? Where do we need to improve? Who is leading in what areas? And we finally arrive at that overall score out of 100, which again is a KPI within itself and what we refer to as overall brand strength. So moving on to some of the results now. So we're just going to start with a couple of highlights that came from our market research, and then we'll move on to the actual brand value and strength results before finally ending with the panel discussion. So hopefully you'll recognize a lot of the logos on the screen. Rakesh, I think you'll notice the one at the furthest on the left. But this is a broad reputation question that we ask, where we're essentially saying to consumers, taking into account everything you know about the brand, how would you rate their overall reputation out of 10? And these are the brands this is based on corporate brands that we've covered in Kenya. A lot of those are banks and the core telcos. And you'll see that distribution with Crown on the left, down to Airtel furthest to the right, with that range of around 8.6 to 6. And all of these are obviously large brands operating within the country. There are some other measures that we look at as well. So this was looking at some of the brand touch points. So we're asking stakeholders or consumers here, which brands do you associate these various characteristics with? So Safaricom came out top for having the best customer service, and Equity Bank for being widely available and having a wide range of products to choose from. Then a new area of focus, which we've included in more depth in our latest wave of research, is sustainability. It's been a hot topic in all of our markets. So this is a perceptual measurement. So we're asking people, who do you perceive as the leaders in sort of contributing to sustainability, so communities, wider society, the natural environment. And Safaricom, Equity, and KCB were first to third, respectively. Then this next example, we just thought that we'd actually unpack it a bit further. So we took banking, and on the left are a number of attributes. If they're a bit small on your screen, just to give you an idea, we've got things like widely available customer service, conveniently located ATMs and branches, being easy to deal with, some sustainability, value for money metrics. And what we've done is we've applied a statistical technique called regression or drivers analysis, more commonly known in the industry. And what it does is it tells you what is important in driving a certain KPI. And what we've done here is we've looked at brand usage. So usage, which we can directly compare to market share, and then what is important. And naturally, if you're a brand owner at a bank and you're thinking, well, what do I need to focus on to grow my brand, to get more customers through the door and opening current accounts, while being widely available and customer service are coming out on top. And then we actually looked at some of the results on the right, sort of for who's leading in what category and how they're performing relative to the next best competitor. So we see KCB and Equity Bank coming up a lot there, which is perhaps as expected, but also towards the bottom we see NCBA and ABSA coming in as well. So on to the top 3 most valuable Kenyan brands. The third most valuable brand for 2023 was KCB, with a value of 46 billion shillings. Equity Bank was above at 65 billion in second place. And Safaricom was the most valuable brand for 2023. We do remember that we are looking at 25 brands in total, so in the full report and later on you will be able to see the full list of results. Then the top 3 strongest Kenyan brands, so just to remember, we do distinguish between brand value and brand strength, and the way I like to think about it is that brand value is more associated with scale and revenue. So if you're a big brand like Amazon, which has incredibly high revenue, sure, they probably have high equity as well. Naturally, your value is going to be very high because it's very correlated to revenue. But perhaps if you're a smaller, more niche brand in a luxury segment where you have maybe 1,000 customers, but if they really like your product, your brand is going to be very strong within that segment. So I'd say that a good way to think about brand strength is that it almost eliminates that size bias. So we can compare a Kenyan brand to Amazon, for example, on the same scorecard out of 100, and that's because we're taking revenue to a large extent out of the equation. So Safaricom ranked third, and it ranked with 85 out of 100. There was a slight decrease year on year, but ultimately that scores as a AAA brand in our rankings, which is incredibly strong and a very, very positive result. KCB also performing incredibly well with a AAA plus rating, and if I'm not mistaken, it actually ranked within the top 10 banking brands globally in terms of the scorecard. And Equity Bank just above at 92.4, also an incredibly positive result. Looking at the broader rankings, so this is now inclusive of the top 25. So you can see on the right, and also looking at the pie chart with the turquoise blue, that banking makes up almost 50% of the value in the top 25. Then telcos, the next 35%. So collectively, those 2 industries in Kenya are representative of 84% of the value, and then followed by utilities and the rest of the sectors, which are all 10% or less. So currently, the bulk is coming from the top 2 sectors, but otherwise there is a broader representation of brands. And then this is a first glimpse of the top 25 from left to right, and we have the value distribution there as well. So you can sort of see relative size of how each brand is performing. And of course, the top 3 that we've just gone through. You'll notice in the box in the middle that the top 10 brands also represent 90% of total value. And then the remainder obviously representing that missing 10%. So that is the final slide. I'll put this QR code back on screen again if you haven't had a chance to load the full report. Otherwise, please do come find Declan and myself afterwards. We'd love to discuss a bit more if you have any questions. Otherwise, thank you, Walter.